Good afternoon, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago. Talking energy futures, let's hit crude a little bit. Crude was up earlier in the day, but price failed as crude took a run at the highs at 69.55 on WTI, but then fell from there, only reached about 69.34 and ended up down over 1% on the day. So taking a run at those highs and failing, not quite a technical double top in the way that it played out, but that does tend to happen even in bull markets where we get a run up and then the failure from there. Now, a couple of things playing in. Venezuela, it seems like they've really sort of sealed their fate in terms of their production woes. The government of Venezuela arrested 2 Chevron employees, and according to a report from Reuters, the reason for the arrest, at least the way Reuters investigated and reported on it, was that they refused to be involved in corruption. Now, if that's actually the case, then you could see foreign producers and refiners of Venezuelan crude pulling out pretty rapidly. The deficit right now that you get in Venezuelan crude oil is about 700,000 barrels a day. If foreign drillers and producers pull out, that 700,000 barrel a day deficit will immediately go to about 1.3 million barrels a day. So that's going to put a squeeze on supply again at a time when demand, at least for gasoline, is starting to spike. So let's talk about that as we get into refinery turnaround season. Refinery turnaround is when refineries shut down portions of their crude refining operations to adjust and retool for winter blend gasoline. And demand is increasing going into refinery turnaround. According to the EIA last week, gasoline is at the highest reported on record in April, and according to AAA, same thing. Gasoline is one of the highest for the month of April that AAA has seen. 9.578 million barrels in demand, according to the EIA. And going into refinery turnaround with gasoline stockpiles just below the 5-year average, we could see gasoline prices spike. Now, what does that mean? Well, that means that as they finish turnaround, they'll be drawing crude oil out as fast as they can to try and refill these stockpiles as the summer driving season demand picks up. So we're just entering the summer driving season. We're not at the peak of it yet. So demand is not at peak demand yet. Now, you could see builds in crude oil in the first couple of reports as refinery turnaround is full swing. But other than that, you'll probably see draws on gasoline as that winter blend is still being used for another couple of weeks. But right now, the pressure from the equity markets, energy stocks lower, equity markets, and the potential for pulling out of the Iran deal, again, geopolitics getting involved in this idea that demand may suffer. So crude oil came down later in the day, was not able to hold its gains any more than the stock market was in the face of a slightly stronger dollar as well. This is Bob Iaccino talking crude oil futures from the CME Group trading floor in Chicago.